What's going on, investors? My name is Dash and welcome to Mind Over Finance. And in this video, I'm going to give you my top 3 Vanguard index funds that every portfolio must have. Hang on a second, one quick thing. Please keep in mind that the information presented in this video is my opinion and shouldn't be taken as financial advice. Please do your own research before investing money in anything. My first fund on this list is a $3,000 investment minimum, and it is the ticker symbol VFIAX, or the Vanguard 500 Index Fund Admiral Shares. Here's why I like it. This fund mirrors the S&P 500, so it's a great way to get the same returns that the market is getting with little to no guesswork. I don't have to be a Warren Buffett, I don't have to be a Peter Lynch, I don't even have to be a great stock picker at all to match the returns that the market is getting. Not to mention, you're investing in some of the most powerful companies on the planet. In addition to investing in these powerful companies and matching what the market's getting, you also get a 1.54% dividend, which is great because you can take those dividends and reinvest them back into the fund to snowball your investment into something bigger. VFIAX also has a really low expense ratio of just 0.04%, and that's tough for any investment firm to beat. And low fees are extremely important if you're serious about growing your wealth with index funds. Number 2 on this list, ticker symbol VTSAX, or the Vanguard Total Stock Market Index Fund Admiral Shares. The minimum investment on this one is also $3,000. Here's why I like VTSAX. VTSAX is really similar to VFIAX in that it includes this broad, diverse list of companies. And it has that same low expense ratio of 0.04%. So if both VTSAX and VFIAX mirror the market, what's the difference? And why do I own both of them? So here's my thought process. So if you think about the S&P 500, it has requirements that could exclude a lot of small to mid-sized companies. And some of those companies might be growing like crazy under the radar because they haven't been picked up by big institutions yet. So having VTSAX might allow you to catch some of the gains that VFIAX might miss. At least in my head, that's how I think about it. Number 3 on this list, VBTLX, or the Vanguard Total Bond Market Index Fund Admiral Shares. What's the investment minimum? You guessed it, $3,000. And you might be watching this video thinking, I don't have $3,000 to invest. And please know that I completely understand because I've been there. But make sure you stick around to the end of the video because I'm going to show you a way to get around that $3,000 minimum. Okay, here's why I like VBTLX. This fund has a slightly higher expense ratio than the first 2 we mentioned at 0.05%, but that's still not bad at all. The yield on this fund is also a little bit lower at 1.2%, but I can work with that. On first inspection, when you look at this fund and you see how it underperforms all the others on this list, it might not look all that appealing. And admittedly, this is the fund that I own the least of. However, on this list, it's also the fund with the lowest risk. And I kind of think of bonds as like the veggies in my portfolio. You know how when you were a kid, your mom wanted you to eat your vegetables? You didn't really want to, but they were good for you?
Eat your veggies, son, so you can grow up and be big and strong.
I don't want to.
Boy, you better eat those vegetables.
So while a bond-based index fund might not grow as big or as fast as, say, a stock-based index fund, a bond fund can earn you tried and true consistent returns. Yes, I want great growth and returns just like everyone else. But I also want exposure to more than just stocks, more than just one asset class. I want to add 2 more funds to this list, but keep in mind I don't actually own either of these 2. One of them you'll see why in just a minute, but the other one I do plan on adding to my portfolio sometime around the first quarter of 2021. And number 4 on this list, VGSLX, also known as the Vanguard Real Estate Index Fund Admiral Shares. The minimum investment on this fund is $3,000. VGSLX has the highest expense ratio on this list at 0.12%. And it's kind of pushing my comfort zone a little bit when it comes to expense ratios. But because this fund is made up of real estate investment trusts, or REITs, which are required to pay dividends, the yield on this fund is also the highest on this list. VFIAX has a 1.54% yield, right? But if we look at VGSLX, it has an unadjusted effective yield of 3.67 and a current adjusted effective yield of 2.78. And to be honest, I'm not sure which of those yields we use, but even if we take the lowest one, it's more than a full percentage point higher than VFIAX, which is nice. So I think it's a little bit of an expense ratio yield trade-off. VGSLX has solid growth over time, you get that great yield, and it gives me exposure to another asset class, real estate. And I get that real estate exposure without having to be a real estate broker or a real estate agent, even though I wouldn't mind learning a bit more about real estate. Number 5 on my list. This fund carries the highest risk of any fund on this list, and I can't jump in because the investment minimum, get this, is $100,000. Ticker symbol VITAX, or the Vanguard Information Technology Index Fund Admiral Shares. Here's why I like VITAX. While it's not the best expense ratio at 0.10%, it's also not the worst. And when you consider the returns on this fund in the last 10 years, that 0.10% almost seems like a small price to pay. And if I'm reading this chart right, this fund has gotten a 20% return in the last 10 years. That's stupid good. Unfortunately though, I think the success of this fund is time sensitive. Why? Because right now, information technology is a really hot sector. But even the hottest sectors cool off over time. And when it does cool off, I just wonder how much it affects the fund. Well, that's my list. Let's go through a few quick things to wrap up. So what do you do if you don't have the $3,000 or the $100,000 to invest in any of the funds that I mentioned today? A great alternative is to invest in exchange-traded funds, or ETFs. Every Vanguard fund that I mentioned today has a sister Vanguard ETF. And the reason that's good is because it allows you to buy into these same great investments without having to worry about the minimums. And whether you're buying into a fund or buying ETFs, keep in mind that investments do change over time. They're going to have their ups and they're going to have their downs. But I like to think of index funds and ETFs as long-term investment plays. Plays that I reinvest my dividends into and add money to regularly over time. And if I do that consistently over time, it decreases my risk and it increases the chances of me having a mighty portfolio. Well, that's the video for today, guys. As always, thank you so much for watching. If you did enjoy this video, please don't forget to black dynamite that like button. Share, and if you're brave enough, subscribe. And join me on this journey to grow Mind Over Finance to 10,000 subscribers strong. And what do you think? Are you feeling my top 5 funds? Do you agree with my list? Why or why not? Let me know in the comment section. And I'll catch you next time, guys. Peace.